I think Wall Street has delivered a strong performance, especially the Nasdaq. Dow Jones Industrial Average kind of faltered a little bit, but still, kind of good returns. Even for local markets, the STI, I mean, it has been a very strong performance. We may potentially see, some of these growth risks, potentially inflation risk coming back, Fed being forced to keep rates high for longer, and that could come with a trade-off for growth conditions. Hi everyone, welcome to the very first episode of Chat the Charts with IG. This is the podcast where we explore market trends, trading strategies to help you trade smarter. I'm Jin Rong, market strategist at IG Singapore, and joining me here today is Alvin.
Thanks for having me today, Jin Rong. I'm Alvin, Premium Client Manager at IG Singapore. And Happy New Year to you, 2025. I think we start off the year 2025, right? We can take a look back last year as to what happened to the markets and all. I think pretty positive for most people.
It has been a smooth ride overall, I think. Wall Street has delivered a strong performance, especially the Nasdaq. Dow Jones Industrial Average kind of faltered a little bit, but still, kind of good returns, I would say. Even for local markets, the STI, I mean, it has been a very strong performance. We have been the top performing markets in Southeast Asia. That's quite surprising, right? Generally, when people think of STI, it's like, oh, such a boring local market. But this year has been surprisingly well, more than 15% return, thanks to the three local banks, of course.
Actually, which index did the best last year in terms of performance? Was it Japan or Nasdaq?
To be honest, I think it's Nasdaq. I think Japan, there was kind of a very good performance at the first half, but thereafter we are seeing somewhat of a consolidation into the second half. But of course, I believe 2025 definitely want to look out for Japan as well. I think economic conditions has been supportive on that front, and definitely looking for more upside in Japan.
And I think no surprises that the worst performing index was Hong Kong and China, right? Although widely expected to be much better because it's the dragon year, people had a lot of hopes for the Chinese index, but I think it kind of ended the year on a weaker note. Unlike Nasdaq, I think now at all-time highs, right? Ended the year at almost all-time highs.
And to be honest, Chinese equities, I think sentiments over the end is still kind of downbeat. But actually, because there was this huge rally in the September, October kind of a period with all that stimulus hope. So actually, Hang Seng didn't fare so badly. So in a way, actually the STI still kind of underperformed the Hong Kong's Hang Seng index. So because of that, that 2 weeks of surge that really covered up a lot of those underperformance. But of course, now we are seeing that it kind of falter back to trading within this very, very slow and tight range. A lot of wait and see on what China authorities want to do with all that stimulus plans.
I think they tried very hard. They tried very hard in 2024 to try to revive the economy, but somehow the sentiment is still not as good as US. A lot of flows away from China and Hong Kong into the US market still.
I think China authorities need to try harder in that sense. I think since reopening, I think a lot of they've been keeping investors' hopes very high since the reopening trade. That seems to just fizzle off, and thereafter there's one stimulus kind of announcement in April. There was a slight rebound, fizzle off. There's another rebound in September, kind of a fizzle off lately as well. So I think around that space, clearly very much policy driven. So we've got to see what they can bring in 2025.
Okay, looking forward. So 2024 is behind us already, right? Let's look towards 2025 and let's see what we can expect for the new year. I think for the Hong Kong side, it's still a lot focused on whether they can spur investor confidence in their market, right?
I think a lot of policy-driven initiative on the lookout here. I think China authorities ending 2024, they continue to say that they will
promise the markets.
They give a bit of promises that they will come in strong, they will do something. But now I think the actual follow through will be what markets are looking out for, because we have been hearing a lot of such talks. But I think what markets really want is the specifics, right? The policy details, how much of a net injection on the fiscal side will you actually deliver, Will it be in the scale of the 2008 kind of financial crisis where we see, 2 to 4 trillion kind of stimulus? Will it be that scale? And of course, what Donald Trump actually wants to do with China, right? So
Speaking of Donald Trump, right, given his new policies that they plan to introduce to US, do you think that China will be very badly affected by his policies? And maybe which economies or countries will benefit from his policies?
yeah, I think for sure, I think China is definitely under Trump's crosshair. I think if you look at the Christmas message, yeah, always gonna shoot. If you look at the Christmas message, usually it will be very festive. But if you look at Donald Trump's Christmas tweet in that sense, of course he said the Merry Christmas or whatever, but after that he sort of take aim at China. Of course,
his Twitter, by the way?
so he kind of mentioned, he did highlight China as I don't know, some
Basically saying that the enemy is still
yeah, I mean, they're basically sort of reinforcing that they're going to come in strong. Of course, Canada is now in the crosshair as well. So I think these two countries are the one being highlighted. So from there you can really see that he's not gonna let loose. He's not gonna sort of give in that sense. And you know that Donald Trump is second term, right? Could be his last term already. He wouldn't most probably wouldn't have a third term.
Yeah.
So he got this 4 years runway to really deliver whatever
last chance to get what he wants done.
Yes. So I think he will come up very aggressive, not like the first term where things could still take some time to deliver. So I think he's more clear what he wants. Yeah. So even before he take over office, he already say what he want to come down on in terms of some of the restrictions. So very interesting year. I don't think it will be a smooth sailing like 2024. Yeah.
Maybe all this is just talk only, right? So like, are there any key economic indicators you feel that traders, investors should watch out for to see whether these policies are actually taking effect or not, and how much they're being affected by it?
Yeah, I mean, for traders, investors, I think there are various arms, right? Of course, there's the fundamental arm that for you probably is the technical. Yeah, the more focus on the technical side. Of course, probably there's a market sentiments, kind of the third arm itself. So I think economic data-wise, it really depends on what markets are pricing at the moment. So for example, back in 2022, 2023, I think the highlight is the CPI, the US CPI, right? Because inflation rate
Even in also, right?
yeah, 24.
Inflation.
Yes, it's still about inflation. But of course, 2024, I think the focus slightly shifted a little bit to whether US will get a soft landing or not. Yeah, so 2022, 2023, it's still all about inflation. So I still remember, whenever the CPI data is about to come out, so when you first release, right, you'll see either a jump in the market or a dip in the market just based on that single.
Based on that number that comes out.
Yes, based on that number. So it's like a bit like playing big small. Yeah. Because you do not know what the number will be, and the market has their expectations. So it really depends on whether it does, come in stronger than expected or weaker than expected. And we know that if we have a stronger than expected inflation rate at that time, it means that the Fed has to come in stronger in terms of tightening rates. So that therefore, when inflation will come in higher than expected, then generally, there's sort of a weakness in the equity market just based on the Fed policies itself.
I mean, my experience with CPI is that the actual data that comes out, right, does not really paint the full picture of what's happening, right? Because the market participants might already price in a certain number, and even though the inflation comes in good, it will actually be worse for the index they're trading, for example. Yeah, basically they expected too much from the inflation, but coming weaker than expected. So a good number might not always be good also, right?
Yeah, for sure. So I think it really depends on the what markets are really pricing, what's the consensus rate. So you got to take that into consideration.
Maybe we can share with our listeners, right, where to see the consensus from.
I think IG we do have economic calendar, and it's updated quite frequently. So you can definitely. Yes, it's real time. Yeah. So of course there may be some slight delay, but the data generally are updated quite quickly. So you can just tune in, just search for IG economic calendar, and that's where you can actually track some of the data that's coming in.
So Jun Yong, I think 2024 we saw all the tech stocks booming, right? A lot of focus on Nvidia, Apple, Tesla. Do you think 2025 will be the same for these counters?
Potentially. I think potentially yes. I think the highest growth potential in terms of earnings is still revolving around the tech sector. Of course, we saw that there has been somewhat of a shift in market play. So initially, you know, of course, all of those AI names have been gaining kind of a bit of favor, but towards year end, you know, there are some chatters around quantum computing, whether it will drive the next stage of you know, productivity, led growth. So I mean, in terms of top volume stocks, you know, how do you actually find them on IG platform? How do your clients actually find all these stocks?
Like for me, the lazy way is to go to the IG platform, right? Under the search bar, when you search for stocks, they show you the top volume stocks being traded by our clients.
At IG, we know that timing and precision are everything in trading. That's why our platform is simple to use, fast, and packed with tools to help you trade. Whether you're trading indices, Forex, or other markets, IG gives you the flexibility to act when it matters most. Opening an account is quick and straightforward. Start trading today at IG.com.
So normally I use that as a reference as to which clients are trading which shares, and you know that those are the shares that people are watching more frequently. So right now it's still Tesla, Nvidia, Facebook, Apple, for example. But I think next year that might change to, like I said, some of the more like quantum computing kind of stocks. Still tech, but not so much the big names. Maybe the smaller names like, I mean not small, but like Palantir, those kind, Sophie Tech, yeah.
I think those have seen kind of a run up even in 2024. And of course, 2025 is whether they can continue to scale to a fresh high. So I think the tech play, you know, is still that kind of, still have that kind of traction, even though, you know, the valuation is clearly high on the end, it's clearly expensive. But if we, you know, all along we have been seeing somewhat of a attempt to shift from growth towards value.
Right.
Yeah, but now with all that hawkish Fed coming in, some of the economic indicators potentially facing some slowdown. If we have rates being kept at restrictive territory for higher, you know, it seems that, you know, year end 2024, you know, it's still that tech names that are still gaining a lot of colors and traction.
But actually high rates tend to be worse for tech stocks, right? Yeah. Because of the discounting of their future earnings and whatnot. Yeah.
And that's really surprising, right? I mean, US Treasury yields more than 4.5%. And generally, that kind of a level is kind of risky for a lot of those growth names. Like between 4.5 to 5%, you know, we know that a lot of tech valuation are towards their outlook, their earnings outlook. So when you have that high, you know, risk-free rate, you know, when those earnings get discounted back, it really makes you ponder whether are you paying too much for this tech names. So of course 4.5 to 5%, I believe that is sort of that shaky level, and potentially why, you know, if use doesn't really come down, you know, some of those tech names could see a sort of a limited upside. And of course, if Treasury used to go above 5%, I think that is where
you'll see a bigger correction in the...
Yeah, I think that's where we could potentially see a more broad-based kind of de-risking on that end. As I think previously there was an instance where yields really hit past that, and
And how did the tech stocks react to that higher yields?
Yeah, generally when it crossed that 5%, I think there was a broad de-risking. Of course, tech names came under pressure as well. But generally, when we look at some of the mega cap tech names, I think overall, I think they are still sort of more resilient in that way, because I think when people look at those mega cap tech names, I think the AI potential is there, the earnings potential is still there, and even in the event of any form of economic downturn, I think the consensus is still these tech names will be able to sort of weather some of those
FANG stocks, is it?
Yeah.
Is there a new acronym for these kind of like very popular tech stocks? FANG was like a thing of the past.
Yeah. Now it's Magnificent Seven, right? Magnificent Seven,
which are the same four still.
So Magnificent Seven, I think Tesla, Alphabet, Amazon, Apple, Nvidia. Okay, yeah. And moving into 2025, we may see another new acronym coming up. So now I think Broadcom is brought into the limelight as well. So I think they are trying to come out with a new acronym to incorporate Broadcom. Whether it will gain traction, I think that we definitely want to watch. But Broadcom definitely, share price running up kind of a fair bit in 2024.
I mean, we don't have a crystal ball, right? But if you were to place some money on a bet, like outside of the tech space, if there's a shift in the flows from tech to another sector or industry, which one do you think will be the one that is going to have the highest growth in 2025?
I think earnings potential is still, of course, tech, but if you look at the valuation, of course, it's kind of high. And I always have this idea that in any kind of a bull market, right, of course, the tech will run first, and then some of those value potentially will run up next, and then the last could potentially be the small caps, where performance is still lagging. So if investors really want to sort of squeeze out that last bit of returns from the stock market, it will be sort of the small caps that will run. And small cap has still been sort of trailing behind the tech names, of course. So I think once we have that small caps that run up, usually that could really mark the final phase of that bull market in that sense. But of course, for that to happen, I think we got to see economic conditions really kind of holding up, and the Fed potentially turning more dovish in that sense. Yeah, Alvin, in 2024, I think we have seen a lot of some of those individual events that have really spurred some volatility in the asset class. Like for example, we have seen a lot of geopolitical tensions in the Middle East, between Israel, Hamas, and that was back in October, where we see some kind of spike in crude oil prices. So usually, when we have all these kind of geopolitical uncertainty, when you observe, how does your client positioning kind of shifted in that sense?
I think generally there's this kind of like big economic events, right, or like major political events. There tends to be a spike in the asset prices. Like oil went up from 67 to about 77-ish, I think, in October, right, during that period. So when it goes up so fast, most of the time clients will be contrarian to the market, because they mostly believe that it's a short-term like shock to the market. And most of the time it does play out. Yeah. Only once in a while, like COVID, right, where you see a very strong rally and people are shorting the market. In such rare cases, then the market keeps rallying, then that's where you get caught out sometimes. Yeah. But also when these things happen, you see more interest in safe haven assets like gold or dollar yen, purely because simply there's more volume, there's more interest. When you read the news every day, you see like news about gold, oil, and dollar yen, right? They'll be focusing on the news and trying to speculate on these kind of news events.
Right. I think initially when that geopolitical event happens, generally there's a knee-jerk kind of a reaction. For example, the Middle East kind of a conflict. But thereafter, once sentiment starts to sort of gather themselves, then they will start to think on whether it will translate to a wider kind of a regional conflict. And if not, if the tension is still relatively contained, disruption to supplies, oil supplies is still limited, then markets tends to fade some of those gains over time. So I think that's what your clients.
Yeah. So that's why the economic fundamentals come into play. Like short term there might be a shock, right? But must see the bigger picture, whether this shock whether there'll be a lasting impact or not.
Yeah, whether you
sometimes it's really just that period of shock only, right? After it goes back to normal already. Like now in the bull market, and then towards the end of 2024, there was a mini shock to the rally. Came down a bit, but it still continued the rally after that. Yeah, and then the fundamentals still support a case for a bull market. So I think if you're going to like trade the markets, right, you should still have the fundamentals at the back of your head, right, to justify your trade direction and generally trade with that flow.
Yeah. It's whether how big that shock will be and whether it will have any knock-on kind of impact. For example, COVID-19, clearly the knock-on impact is stronger. And economic activities are clearly disrupted. Business cannot open, consumers cannot go out and spend. So those kind could draw more of a major impact. But if some of those geopolitical tensions still seem relatively contained, then markets tends to feel it. So you can maybe see in the headlines for a while, but after that the interest starts to die down over time. So is there any, for example, if you look towards end 2024, we have the US election, that Trump trade that markets have been eyeing. So do you observe that your clients are rushing into that Trump trade, or are they well positioned?
I would say that because of the whole of 2024, right, the market has been very bullish. For the US indices, they are generally positioned to be shorting the market. Yeah, basically thinking that the market's overbought. So they rather be like short the market, and this period, if you're short the market, actually receive interest instead of paying interest. So they tend to be short on the market, but I think the results of the election didn't really impact the way they viewed the market. Yeah, because they already like having a position in the market, right? So they don't react that much to the results of the elections.
So they have a tendency to short the market.
At this point, yeah.
At this point.
And it's nothing wrong. I mean, it's not surprising also because I think it's been about 2 years of bull run, right? So people are really expecting for a retracement or like a mini market reversal for the market to come off a bit before continue going up.
Yeah.
Yeah.
Yeah, I think 2024 we have really seen a lot of bear trap, I would say. Yeah, like we could have somewhat of a sharp retracement, potentially even dipping below like certain key support confluence or moving average, and then it starts to sort of whip them out again.
There were many like signals or hints of the market retracing quite strongly, but all very short-lived. Like come down for like 1-2 weeks, and then after it just slowly go back up again already.
Yeah. And many of those actually, move past some of those key sort of support levels, sort of squeeze out some of the stop loss level, and then it hits back up. So I think there are kind of a lot of bear traps in place in 2024. Yeah, so for 2025, how do you expect the trend to continue based on technicals?
I mean, firstly, nobody knows, right? But based on what I saw on the charts, there's a 2-year cycle. So it's like normally a 2-year bull market. 1 year you come off, 2 years up again, and then the next year it'll be down, right? So end of 2024 was the so-called like anniversary for the 2-year bull run. So I think 2025 it will come off slightly. But of course, as usual, nobody knows. Right? Depends on data and market sentiment. But based on technicals, I feel that these patterns tend to play out. And now it's really over, I won't say it's overbought, but it's very high already for the US indices. So there's a good chance based on like risk to reward ratios that it will come off slightly.
Yeah, it seems that there has been a lot of optimism in Wall Street in particular. And of course, valuation-wise, it's clearly expensive. Not just across its peers, it's even based on a historical average. Valuation is high on the US side, but my view is that we will need a sort of a trigger, to trigger somewhat of a unwinding. It could come, we may potentially see, some of these growth risks, potentially inflation risk coming back, Fed being forced to keep rates high for longer, and that could come with a trade-off for growth conditions. I mean, we have already been seeing unemployment rates slightly ticking up. So whether it will move up even further, that will trigger a lot of those chatters on whether soft landing, hard landing, those kind could sort of come back in 2025. But of course, we shall see. We have that Trump administration coming in, so we got to see what policies he does bring. So in terms of for your clients' positioning, is there any specific asset class that they are leaning into for 2025?
I think this period people are looking a bit more at like dollar yen. Not just period actually, for the past 1 or 2 months, people have been focusing on dollar yen because there's been a lot of movements for dollar yen. And then I think yen also is something very close to Singaporeans, right? Like everybody go to Japan for holiday. So they're looking at the interest rates the FX rates for yen quite closely. And they saw that yen is very cheap now, right? So they will think that, okay, maybe it's an opportunity for me to turn this into a trade idea as well. Since yen is so cheap already, I might as well try to long some yen against the US dollar. So there's been a focus on dollar yen. And then for the VIX as well. Because VIX has been quiet for a few months now already. And then it tends to be reactive towards like major news events, shocks to the market, for example. So typically when the market comes off, the VIX will have a spike, right? And because VIX is almost at the all-time low already, the clients are basically waiting for a spike in the VIX to play along together with the retracement of indices. So they see VIX as a in a way like safer way to bet on the market coming off. Because it's so low already. So it's harder for it to go even lower.
So usually VIX, right, kind of interesting because some of these spikes tends to be sort of short-lived in that sense. So it can give you that very quick sort of a return, when volatility were to spikes. So I think there's sort of a statistic that say, when VIX were to move above 50, the S&P 500 VIX, if to move over 50, that is where that market panic could be at near its extreme, and that is where you should sort of reverse some of your short equities trade, for example. So I think it's quite interesting that VIX some of those level that we can watch, for example 50, and generally the consensus is that below 20 generally is more of a risk on, more stable, less market stress kind of a situation. Yeah, but of course, for VIX, you can start to drift for kind of a long time before we seen that sudden shock in place. But in terms of commodities like gold prices, gold prices have a very strong run up in 2024.
And people are still buying actually. People are still going long on gold and silver for various reasons, like maybe festive season or hedge to inflation. People are still buying these gold prices at such high prices, to be honest.
Oh, so your clients are still leaning into long trades for gold?
I mean, overall it's quite balanced, I think. But previously, people were more short on gold until it broke out of the, I think it was the 2000 range. That's why people look more towards longing gold instead of shorting gold from there already.
Okay. Yeah, so I think for gold, I think quite interesting because some of the ETF flows that we are seeing, retails are not fully jumping into it yet. So I think a lot of the gains has still been contributed by some of the money managers, the institutional side, central banks of course. But in terms of retail, the inflows hasn't been as strong as what we expected, given that price performance. So of course, 2025
one more upside.
I mean, potentially if he has some of those retail flows, that's why I asked whether your clients are kind of still leaning there actually. Yeah, but in terms of equities markets, are they still leaning towards the US or are they trying to rotate into undervalued areas like Hong Kong?
I mean, this is trading, right? So people normally focus on the market where there's the most volume. So US will always have the most volume. I would say the focus is still on US shares, but you start to see people closing off their positions for the big name tech companies. Purely because the price is so high already. There's a bit of like profit taking and shifting towards more, some Hong Kong shares maybe, listed in US. Yeah, Tencent, Alibaba. Yeah. There is a shift towards the prices which are more depressed.
Right.
Yeah.
Right.
Okay, so I think I covered quite a bit for what's going to happen in 2025 and what happened in 2024, right? So a lot of things to look forward to in 2025, especially the interest rates and inflation environment. Yeah, I think inflation is something that's very important to everybody, right? Because their mortgage rate is tied to their home loan, their interest rate they get from the banks, those kinds. So a lot of things to expect in 2025.
Yeah, I think 2024 brings us a lot of key milestones. I think even for our local markets, we briefly touched 17-year high. So now everyone is thinking whether we will hit past that 4,000 level to a new record. We haven't hit that for decades, ever since the 07-08 crisis. So that kind of level is something that markets will be watching, whether 2025 will bring us fresh new time high.
I mean, 2024 was very kind to almost everybody. They say a rising tide floats all boats, right? So I would say most people are happy with the market performance in 2024, and hopefully that continues on into 2025.
Yeah, I think it will be a very eventful year. Trump administration clearly will focus here. And this is the first episode of our podcast. Yeah. And of course, we hope to bring to you more content and discussion over the coming episodes. We hope you find today's content insightful and inspiring. And remember, trading smarter starts with the right tool. And at IG, we are here to help you every step of the way. Don't forget to subscribe to Check the Charts with IG for more expert insights, and visit ig.com to explore our platform.